right, good afternoon, everyone. Apologies for the technical difficulties. We're just mad-libbing right now, going along with it. So hope you guys enjoy. As you know, we do these webinars just addressing deep diving into our loan products, just to give you a little insight on our day-to-day jobs, okay? Along with just how to be able to make you guys better prepared to help you serve your clientele better. With me is Chris Taylor, and we'll just start off with just introductions. So Chris, go ahead and start. And
I'm Chris Taylor, out in Colorado. Been with Angel Oak 10 years. I've been doing these webinars for a long time, so we're really trying to help you market these products and be successful, be an expert, with your referral partners and your borrowers. So we do these to try to educate you on the latest and greatest of our product line. So thanks for joining me.
Yeah, of course. And I'm Jack Stevenson. I've been with the company for 5 years, and I'm now hosting a webinar. So this is going to be fun. I hope you guys enjoy. We do have, feel free to put your questions in the chat. We'll get to them as they come along. And, we'll just start off, obviously, the DSCR products it exploded over the last 10 years, right? It's a very popular product, no income doc for investment purchase and refinance transactions. And it's just exploded over and typically up front, we'll do a little questionnaire to see who has originated one and who hasn't. Now, granted, I don't have access to this, so we'll just dive right in, Chris. Do you want to just start off and we'll just go down the DSCR product page, and do you want to just comment on all of the attributes we have right here?
Yeah, that sounds great. The DSCR product, overall, was invented to basically help borrowers with investment properties and to be able to either purchase or do cash out or rate and term refinances on their investment properties, or to purchase and acquire investment properties without any income documentation or DTI requirements. So it's been a super successful loan program. It used to be maybe 10-20% of what we do. Now it's more than half of what we do. We get calls all the time. The product has become really flexible in terms of the ratios that we require, the types of borrowers. So overall, it's a credit score we require at 680, and we can go up to 85% with a higher credit score, of course. And we have a wide variety of different ratios that we allow now, from 1-to-1 or better, which used to be the standard of the product, to now what we offer, no ratio, all the way down to no ratio. So it's almost like a no doc loan. And we now offer it in states that you're not licensed in. So that's been a big plus too, where, you might have a referral, in another state that you don't work in, and we can do the loan there too. So
that's awesome. And to highlight a couple things, if you're unfamiliar with the product itself, the DSCR program, instead of using, income, tax returns, transcripts, employment history, ultimately what we're doing on this product is we're using a borrower or buyer is purchasing or refining an investment property, and we're using the cash flow analysis of the subject property to qualify the home buyer or borrower in this case. Okay, so when Chris mentions no DSCR, what that means is the equation, the DSCR equation. What it is it's the fair market rent value divided by your mortgage payment. Okay, so when we say, hey, it's cash flowing, what it means is your fair market rent value, or the rent that the property is currently renting out for in a refinance transaction, is greater than your mortgage payment. Okay, so for instance, when we talk about no DSCR, the program, it doesn't even have to cash flow for your property to qualify. We can still do that loan if it doesn't cash flow. Okay, and then going to pivoting a little bit, we'll touch base on short-term rentals. We now allow for AirDNA with 0 parameters. Now, what AirDNA is it's this third-party website. So if you're trying to be more aggressive and you have let's say, short-term rental property that isn't cash flowing with your fair market rent value, it's rural, maybe it's Blue Ridge Mountains of Georgia, or it's a rural property, or let's say it's urban, but it's more of a short-term rental property around the beach. It's truly used as short-term rentals. We can use AirDNA, this third-party website, and I'll plug into it just to give our customer base a little background on what AirDNA is. And we'll pull the rents from AirDNA on a purchase transaction and use the projected revenue instead of the fair market rent value on the 1007. So that's huge because we use the 100% of the projected revenue and have zero parameters for everything else, for market score and for occupancy percentage. So this will give you very strong rents for your short-term rental market. Okay, this is a huge plus for the DSCR program, as short-term rentals are difficult to qualify nowadays.
And I'll just chime in on that subject. It's really cool that you can be pre-approved for a DSCR loan with the income already approved before you go to underwriting. So that's really cool. You already know what your ratio, and that, for some of you who have done DSCR loans in the past, you're always waiting for the appraisal to come in and the rent schedule. This is ahead of that. So it's a really cool feature.
Right. It's awesome because, again, your business isn't in the appraisal business. You don't know what the fair market rent value is going to be, and don't even, you don't want to pretend to be an expert either, because that can backfire on you. So again, AirDNA, you get rid of all of this. You can actually say up front, hey, I've got you pre-approved. We don't even care what the fair market rent value comes back on the appraisal, because sometimes that is a gotcha. If you think it's going to cash flow at a 1.0 and you need the 1.0 and it doesn't come in, you have to restructure your DSCR loan. Well, guess what? With AirDNA up front, you're going to know if it works or not. So it's just a huge advantage to be able to structure your loan up front and know whether or not it's going to work. Okay. Title vesting, one thing we didn't really touch up on. Title vesting, you can vest your LLC, S Corp, C Corp on title. Okay. Revocable trust also allowed on the DSCR program. Now, all owners of the LC, C Corp, S Corp, revocable trust does have to be on our loan. Okay.
We also allow permanent, non-permanent resident aliens. Also, the DSCR loan is for foreign nationals, so it has the different types of borrowers that we now allow, which is great. A lot of foreign national loans come through, and it's been a great loan program for that.
And Chris, could you touch up on the application, what we're looking for on the application, more specifically the employment section, along with, the real estate owned section? Just touch up on both of those.
So typically we want a full application. When you interview your borrower, you want to know everything about them. But on the DSCR loan, the one thing that we don't want is employment and income, because we don't calculate a DTI ratio. We're looking at the DSCR ratio, debt service coverage ratio. So we would like to have, where their residency, their primary residence, et cetera, and all of their REO real estate that they own schedule listed on the 1003. That's really important, because we just want to know if they have a mortgage, they're paying the mortgage on time. That's the only reason we need to know that. So it's important to have the REO schedule and their primary residence on the application. So.
No, that's awesome. And again, just to touch up on everything Chris just said, we're only verifying mortgages reporting on credit, primary, and then subject property on a refinance transaction. So any properties the borrower owns that are free and clear, you don't have to disclose that on your application in the real estate owned section. Same with any investment properties the borrower has, any private money loans the borrower has on investment properties that are not reporting on credit. You do not have to disclose those, and we're also not going to look at any mortgage verification history on those properties. Okay, so huge benefit, because just in terms of the loan product itself, it's a speed loan. The purpose of this loan is to get it done quickly and not having to verify those mortgage payments that aren't reporting on credit or the primary residence or the subject property. It's just a huge advantage to getting your loan done fast. Okay.
Yeah, ultimately, the DSCR loan program has just exploded, because I think the biggest reason that I've seen recently is that the interest rate on the DSCR loan and an interest rate, let's say on a conforming loan, is closer than it's ever been, at least in my experience in this business. So it's sometimes even priced better, and without all the headaches involved in a full doc loan, the DSCR loan program is quick We don't need a CD. There's a lot of, you kind of have, you can use speed as a weapon on this product, which is great.
Yeah. No, thanks. And something else that's also, awesome on this program is 3 months reserves only on subject property. So again, if the borrower has, or your buyer has 6, 7, 8, 9, 10 different properties, we're only looking at 3 months reserves on the subject property for asset verification. So again, they can have 10, 11, 12 different finance loans. And we don't have to show any reserves on those. And it's only 3 months on subject property on a no income doc loan program. So it's just it's such a ton of benefits to the DSCR loan. Chris, can you touch up on just what scoring FICO we use on the DSCR loan?
So our minimum FICO is
with multiple borrowers.
Oh, sure. On the regular DSCR, we will take the higher of the borrower's credit score. And so we used to take the lower of the 2 borrowers or 3 borrowers, but now we will take actually the highest, which is great.
Which is huge, especially, you pair it with LLC vesting. So for instance, if you have husband and wife are owners of the LLC, we do require them both to be on our loan. However, we'll use the higher of the 2 mid FICOs for pricing purposes. So you will get that better priced loan if you do have multiple borrowers on the loan on our transaction.
And keep in mind, we always allow a rescore during the underwriting process. So if you're trying to bump up to that next bucket, we allow you to do that.
No, exactly. And something that we just had enhanced is now for spousal funds, they are not treated as gift. So now all we need for spousal funds is the spouse's bank statement sourced or seasoned assets for 30 days and an access letter. And we count those as the borrower's own verifiable funds. So no longer, which by the way, we also allow for gift funds and up to 6% seller concessions on this loan product. So extremely aggressive on seller concessions and gift funds, but spousal funds, someone who's not on the loan will be considered the borrower's own verifiable funds as well. Okay. And Chris, we also touched up on unlicensed activity. So again, we can originate DSCR loans where you are currently not licensed in. Okay, so huge benefit. You will be able to originate in these states. If you go to our website under the mortgage programs DSCR, you'll be able to see a list of all of those states you'll be able to originate DSCR loans in, even if you're not licensed. Okay, and I think we just increased that before, right, Chris?
Yeah, we're constantly looking to increase that to get as many states as possible.
Thank you. And also, something that we also have, you guys all have access to, is our DSCR calculator. So again, if you want to see if a loan is going to work, if a loan is going to cash flow, which by the way, at 80, we can go up to 85% LTV with a 720 plus FICO score on a purchase transaction, up to 4 units. Okay. So if you have a realtor who does their due diligence, gets that income calculation through comps that you think is going to be there, you can come here and plug in your rental income, your loan amount, taxes, insurance, interest rate, and see if the loan works. So again, and I'll just plug in one right here, Chris, and let's just do like a 200,000 loan amount. You'll be able to see exactly if your loan works. So if you plug in taxes, insurance, it's going to give you your ratio up front. More specifically, if you use AirDNA, you'll know what your rental income is going to be. So you can come here and like we said, if your loan works up front, this DSCR calculator is here to help you guys. Okay. All right, Chris, next. Yeah, go ahead.
Yeah, you always have the ability to take a lower LTV. So remember that for a different ratio requirement.
Right. And you're not out of the game. So again, you might have to restructure, and then you always have AirDNA to help you out. Now, granted, we also go down to a 0.0 ratio and no DSCR ratio. So even if it's not cash flowing, we do have options. We're not out of the game. Obviously, you might have to restructure the loan a little bit to make your loan to value either, you know, work for the specific loan that you're on. Okay, Chris, let's go through the non-QM quick quote. So let's say we have a DSCR loan and we're coming here. Can you just kind of touch up on the quick quote here?
Yeah. So
let's say I'm a loan originator and I have a loan. Where do I go to submit?
So remember that you can always go onto our website and do a quick quote, which can, you know, we'll show you how quickly it takes, you know, less than 30 seconds without a login. You go right to our website. We've revamped it now, so we've tried to make it a little bit more easy to use. So you go right to our non-QM quick quote off our main web page, and then you'll click on broker as the channel. And now we have it designated by product. So you click on the DSCR loan program, and then fill out the parameters, the loan amount, the FICO score, the LTV is really important. The state that you're in is really important, and also, you know, you can put your compensation, and then if you go down to let's see, it's hard for me to see the screen, but you'll see some pricing right there. So you can adjust your pricing based on the prepayment penalty, the LTV, the FICO score, and you'll see the rate stack that's available.
Right here.
Also, the property type is really important. And it's a good tool to use if you're trying to strategize your loan on, you know, how much you want to put down, what the credit score is going to be. You know, the prepayment penalty impacts the pricing very much. So
it looks like we have a straggler. So John, it's nice of you to join us. Thank you for tuning into the webinar today. Do we have your mic on? Oh, 1 second. Okay. So we'll continue, Chris. But as you can see, so you'll be able to plug in your exact situation. You can toggle the prepayment penalty. So you can go down to 2 years if you like, and you'll get pricing for a 2-year prepayment penalty. You'll go up to 4 years. This is at an 80% loan to value, by the way. And you'll see pricing will get better the lower your loan to value is. So any refinance transactions, you're going to get very good pricing on. Okay.
I always recommend when you're pricing a loan, a lot of times somebody will come in with, you know, a high LTV. It's really good to try the next bucket down so you can just see the difference on what the pricing is at that lower bucket, because it's good to be able to inform your borrower of that.
Exactly. And so Chris, just with this specific bucket, where do I go from here? If I'm trying to submit a pre-qual over to you to try to get everything done, get my borrower pre-qualified, where would I go from here?
So you'd select the rate, and then you're going to go to the next screen, and you're going to complete the requirements there. This is also where you're going to upload, you know, the 1003, the credit report, but it'll show you right there.
Right down here. Exactly. So, and for a pre-qualification, we need a credit report in 1003, and that's it. We can turn through these pre-qualifications very quickly. Once you get it in, shoot us a text, shoot us an email, and we'll get to your pre-qualification immediately. Okay, you drag and drop it into these 2 buckets, click submit at the bottom. Now with mine, it'll give you 2 errors because I have not uploaded a credit report 1003. But once you complete all of this data, click submit at the bottom, we'll be able to spit out your pre-qualification quickly and send over rate options available for you with both borrower paid and lender paid on the second page of the pre-approval. Okay. All right, so that is the quick quote. So if you want to go and get your borrower priced out, you'll be able to go from our Angel Oak homepage, Angel Oak Mortgage Solutions, click on the non-QM quick quote, and you'll be able to get quote out any scenario on the DSCR program for you. Okay, Chris, do you want to go ahead and touch up on closed-end or DSCR second liens now, a new product that we just recently rolled out? Do you want to go ahead and touch up on that right now?
Yeah. So the DSC, well, first of all, the entire HELOC and closed-end loan program has been such an popular loan program. all of us now are working on these, and it's just been awesome. We added bank statements, and then we added just recently the DSCR second. It's a closed-end loan program that allows you to do a second mortgage as a DSCR loan. So it's really cool that we have that. And now they don't have to pay off their first mortgage if they don't want to. So it's right now it's the max loan amount of 350,000. We need a 700 credit score. We allow LTV of 75 and 70. And it's again, it's not a HELOC, it's just a closed-end loan, so it's a fixed term, and it's a DSCR ratio closed of 1.2 is our starting point on that.
Awesome. There we go. Did I just unshare? Hold on, let me go back. Sorry about that. Let me see if. There we go. Okay, sorry about that.
Okay, sorry about that. And I think overall, it just allows you to get to, for those properties that have equity, don't want to pay off their first mortgage, you can now do a closed-end second with a DSCR ratio of 1.2 as a starting point.
Yeah, and keep it that, and this program, it's just constantly expanding. And something to keep in mind, you can cash out on a DSCR property. You can cash out with a DSCR loan on an investment property and use it as down payment for a new DSCR purchase. So if you have clients, if you have realtors, this is a great product for realtors looking to acquire a portfolio of houses, right? You can cash out on one loan, turn around and use it as down payment for another DSCR loan. So again, if you're short on assets or anything like that, which by the way, not to mention assets, you can use to cash out towards your reserves, towards your cash to close, and obviously only 3 months reserves required on the DSCR loan. So if they have multiple different properties, you're only looking at 3 months reserves, and you can use a cash out towards your cash to close and reserves. Okay, just a lot of very unique and very a lot of ways to create business for yourselves with the DSCR program. Not to mention the second lien DSCR as well that was just recently rolled out. Okay. And just like the first lien DSCR, you're going to come to the second lien option from the non-QM quick quote, and you'll be able to plug in your specific scenario for the DSCR second. You'll come here to the quick quote, second lien, the DSCR second, and plug in your scenario. Just
by
like
the way, and on this new quick quote format that we have, foreign national, I believe, is a separate item, so you can. That's really a DSCR loan also, but in the beginning you'll see that as a separate option. So.
Yes, you will right here, the foreign national. So for your foreign national borrowers, we do allow, which by the way, Chris, and we'll touch up on this real quick. Chris, can you explain what we're looking for on the application for a foreign national borrower?
So foreign nationals is really kind of like a no-doc loan. I mean, we're not looking for income. We're not even looking for credit. We're just looking for basically their country of origin, the type of visa that they have, which we will, at the pre-qualification stage, approve that. Those are all listed right there on the screen. It's a 70% loan to value loan with a 1 or better DSCR ratio. We have to season and verify funds 60 days and 30 days in the United States. So it operates just like a DSCR loan. We have to have 1 or better, however. We don't allow below a 1 or better or 1.
Yeah, and again, this program it's awesome for your foreign national buyers. It's no tax returns, transcripts, income, no nothing basically. It's no credit either. There's no credit requirements on the program. It's basically a visa from your country of origin, and then also if you're from a visa waiver program country, all we need is an unexpired passport, and we can qualify your borrower on the foreign national program. And guess what? It's not just for purchase. You can also cash out on this program as well. So your foreign nationals who do own a property, an investment property locally, they will be able to cash out on those properties up to 65%. It does need to cash flow though at a 1.0 ratio for that cash out or the purchase transaction. So that's for National. Chris, I'm going to go ahead and pull up the marketing. Give me 1 second. Anything else you want to touch up on whether the DSCR, the DSCR seconds, cash out transactions, purchase transactions?
I just encourage you to price out the loan, because if you haven't done a DSCR loan, you might think in your mind it's going to be a high rate, and the rates are just really awesome right now in non-QM DSCR loans. In many cases, you might even find better than a Fannie Freddie loan. It's more flexible, less documentation. It takes, very, very limited amount of time to close these. So it's just become a very flexible program for investment property loans.
It is. And it's just a speed loan at the end of the day. It's speed on top of, very, very good rates for second home and investment properties, not second home on the DSCR program, but non-QM in general. Very good rates on second home and investments. More specifically, the DSCR, it's a speed loan where, at the end of the day, it's just very beneficial to your borrower. So if you're not offering this product, you definitely need to look into the specifics and contact your local account rep. Me and Chris are here. We can help you through this. That is what we're here for, is to help you, walk you through your scenario. And if you don't know if it's going to work, or let's say you're not getting product pricing, call us, because we'll be able to advise why you're not getting specific pricing. If you have to, a loan amount that doesn't qualify, or an LTV, which, by the way, something that we didn't really touch up on, is we do go up to 4 units, up to 85% loan to value with a 720 plus FICO on this loan program.
Which is really strong for an investment property loan. And there's no MI. Remember the 85, there's no mortgage insurance. So.
Yeah. And here we go. I am currently logged in. Chris, we'll talk through the marketing portal real quick. Which, by the way, this is just and this is how you're going to access your flyers, and we'll go through flyers, social media content. But the way you're going to be able to access this information is you're going to go to Angel Oak's homepage, okay? And then you're going to click on your broker login. So if you don't have credentials, contact your local AE, me or Chris or whoever your local account executive is, and they'll be able to set you up with credentials to be able to print out personalized flyers for yourselves.
We want to help you market these programs. So whether it be your referral partners, if you want to do, for example, I don't know if you've been to our local, broker shows, you see our presentation, we can actually help you and give those presentations for you as your investor. But we also have these flyers that Jack's showing right now where you can put your own logo on them, and you can market our loan programs, or even on social media. So we're just here to help you market these programs and be successful at it.
Exactly. And to Chris's point, you get to personalize these flyers to yourselves. So ultimately, you're going to log in, you're going to go to, once you log in, your portal is going to look like this. You're going to click on the marketing portal, hover over it, click on flyers, and you'll see, I'll go back. You're going to see a list of flyers that you have access to. Actually, it doesn't look like I'm going to be able to go back. So as you can see, if you click on one specific flyer, here is the investor cash flow, which is another name for the DSCR loan program. And you're going to be able to plug in, personalize it to yourselves. So you're going to plug in your name, phone number, email, etc. And you'll see these flyers right over here. You can plug in a file. So you can put, a headshot of yourself, your company's logo at the top. If you're your own broker shop, you can do it. If you're a larger mortgage company, you can do that as well, where you input your stuff. And then just to change, so let me plug everything in, click to see changes down here. I know it might not work because I'm hosting right now, but so you'll be able to click to see changes. It's going to update. And then, you're going to be able to do this for every one of our loan programs. So the bank statement loan, the P&L loan, every other loan, you're just going to be able to adjust manually by changing the loan program. Okay. And mine seems to be frozen. So let me see if I can exit out and go back. Okay. There we go. Okay. So the investor cash flow. So you're going to be able to personalize these, send them to your realtor clients, send them to your databases, and let your realtors know that you can do these programs. You can do these types of loans. Chris, do you want to talk about the social media? Well, we'll go to presentations, just like Chris said a second ago. So we're more than happy to host Zoom meetings or show up in person, and we'll even do realtor presentations for you guys. Now, granted, we'll be affiliated with your company. We'll just be the program experts, and we'll just come and pose as a arm and a leg of your company, and we'll just go through basic program guidelines with your realtors, because realtors are great referral source themselves on this program. They always are looking to purchase properties, and you can use this for your realtor partners.
And if you've been wanting to get in with a realtor for a long time, this is a great program, a great way to get their buy-in and to start doing business with them. Because if you do get a room full of realtors and you give a presentation like this, you might end up getting one of their own loans. Highly probable, because I believe realtors are the highest percentage of loans we have in our portfolio. And what a way to win them over when you do their own loan.
Yeah, and not to mention, I mean, a lot of realtors are 1099 as well. So again, they might have write-offs. They might not be able to qualify in the first place for an investment purchase. So again, another reason, because we're not looking at employment history, we're not looking at income, we're not looking at anything related to those two items. So again, as long as you own a primary, you're going to be able to qualify for another DSCR purchase. Okay. So that's going to be your presentations. You can come here, customize these forms, host realtor presentations, contact your account executives, get us involved. We'd be more than happy to help you guys grow and expand your businesses. We also have whiteboard videos. So again, these are pretty cool. You can customize these. These are just little videos, shorts that you can post on your social media pages, reels that you can make from it if you have a business Instagram. I know that's a little bit newer of a concept, as Instagram is a little bit newer, but you'd be able to post this as a reel and customize it yourselves with Canva or a third-party source. And then obviously the social medias. So look, we do all of this for you guys. You guys can come here, download this, post on LinkedIn. You can post on, did you knows, just snippets to get your realtors involved, or just your realtors asking questions. Because again, you can come right here and have access to all of this information that we provide you guys with.
And again, I know we didn't do the poll in the beginning, but there's a large percentage of people that have not done a DSCR loan, or a realtor that has not worked with one. So the better that you can educate them, you're going to get them in your court doing more business, because it's going to open up so many buyers for the realtor that they didn't think they had.
No, that's great stuff. And Chris, is there anything we didn't touch up on? Do we have, I don't know if we have access to the chat. And again, if you guys have any additional questions, just feel free to contact us. We will get answers to you guys. We'll put our email out there, and someone you'll be able to contact your local account reps. If you're not sure, come over to the Angel Oak web page, and we'd be happy to get you in touch with one of our account executives. But again, yeah, go ahead, Chris.
One thing we didn't bring up, but we did roll out our ARM products, and
yes,
we're seeing a little improvement in that and the rate. But we're expecting big improvements in the ARM product, and that's going to be huge for you too, to improve your qualifications, maybe get a higher loan amount because they qualify for more with a lower rate. Yeah.
And I'll toggle it, and you'll be able to see as rates go down, your ARM pricing is only going to get better. So make sure you're up to date on this. If you're losing by an eighth or a quarter, and you have a very rate sensitive borrower, you can always flip your loan product from fixed to ARM, and it should give you a little bit of rate. And you'll see as rates get better, obviously your ARM pricing will get better as well. So make sure you're not losing by an eighth or a quarter. Make sure you're getting your borrower the best pricing if you think you're losing out. Which, by the way, Chris, something we also didn't mention, we obviously have ARMs fixed. We also have interest only. And I do want to touch up on this. because it's going to affect, and we didn't really touch up on this on the calculator, but your interest only is very important, because it's going to affect your actual DSCR. It's going to affect your ratio. So if you're at a 0.95, if you're at a 0.98 ratio, and you're not getting your loan to work, you can pivot to an interest only option. Your payment is going to decrease to get you above a 1.0. That is something we have access to. By the way, the interest only option is a 30-year interest only, 10-year interest only period, followed by a 20-year fixed amortization. And the 10-year interest only period is it recasts. So if borrower pays down, their loan will recast the adjusted principal balance. Okay. But just for qualifying purposes, so if you need an 80% and you have a 0.95 ratio, you'll see, and I'll plug in the situation right here. What did I plug in over here, Chris? Let me come back. Oh, wait, hold on, I got rid of it. But let me plug in monthly rental 500,000. I'll get it close to qualifying. And Chris, you can touch up on that if you'd like as well, real quick.
Yeah, so keep in mind, we're showing you what the ratio is going to be. And then we can also walk you through what options there are, for not meeting the ratio. Interest only obviously helps. It helps improve that ratio because, you don't have the principal payment being made. I would also just say that during the pre-approval process, this is kind of part of the pre-approval process, that when you are pre-approved, you're ready to go for underwriting. And we can also make an exception, request the exception to be approved prior to underwriting. So if there's an issue with the property, and a lot of times it's the property or the borrower, there's many different things that happen, we can look at that ahead of time. So.
And one thing that was on our page over here that I'll discuss in a second, but it says no more than 5 loans, and you can do more with exception. Guys, please contact us about that, because I had a 8-pack about 4 months ago that just recently closed and funded a few months ago. So again, don't think that you're out of the game just because you have more than 5 loans that need to be done for one borrower. Contact us, because we do get exceptions for that all the time. Okay. But going back to the interest only option that I wanted to touch up on, again, this is a scenario where your fixed ratio is a 0.91. It's a 91.36 or 0.91, however you want to put it. And you can save your deal at an 80%. So let's just say we're at an 80% loan to value. You can save your deal by flipping to interest only, decreasing your payment. And look at your payment too. It decreases by about $400. So again, you can come here, flip to interest only, and it's going to give you, it's a 0.11 differential to be able to get it above a 1.0 ratio to close your loan as an 80% loan to value loan. So the borrower won't have to bring 5% more down to go 75%.
Yeah, we try to give you all the tools possible. We have us to help you be successful. So when your loan is pre-approved, and keep in mind the pre-approval process is usually about less than 24 hours, you can tell your realtor or whoever you're working with that they have a solid approval.
Yeah, no, again, I mean, just get in touch with us. That's what we're here for. We're here to walk you through this process. And in closing, Chris, is there anything that you want your listeners to know, and just to going forward, how we can help?
I would just say that this product has just exploded. It's so popular. And if you haven't worked with it, now's the time. We're here to help you. We would love to help you become an instant expert at these and hit the ground running. Don't let a borrower go by the wayside because that realtor maybe just didn't tell you about that borrower that he or she thinks doesn't qualify. So
yeah, no, that's great. I agree. And it's, guys, rely heavily on us on this loan. Rely heavily on us. If you're not an expert, we can make you experts, just like Chris said. And that's a great point. We are here to help you guys become good at this loan. And this is a great loan product to diversify yourself from any other loan originator. Everyone is looking for a no income doc, whether it's now or maybe it'll be in 6 months, but don't limit yourself to the traditional loan products. This loan product is here to help you guys diversify yourselves. Okay, so again, just rely heavily on us. We'd like to make you guys experts, and we are experts. We've been doing this, me and Chris, for over 5+ years. So again, just rely heavily on us, and you know, just get in touch with your local account reps. If you guys do have any questions, by the way, reach out to us via our website, email. All of our information is there. You know, we will get back to you. We'll get you in touch with your local account executives. And if you guys have any other questions, just don't hesitate to contact us. And I appreciate everyone for coming and joining us today. And I hope you guys have a great rest of your week.
Thanks for joining.